Well, good. Everyone's with us today. Today we have a special guest, a very good friend of mine, John Merrifield. We've known each other for like 10 years, and John's an outstanding professional. We in professional friendship over time. So thanks for being with us today, John.
My pleasure, Mark. Thanks for having me.
So today we're going to talk about the first time home buyer programs. Anyone who's a first-time home buyer would benefit. John's a mortgage agent, and he has himself bought and had as real estate investments multiple properties over many years. So he brings a depth of experience, not just from a mortgage perspective, but from a real life perspective, closing deal as the consumer. So John's going to help us understand stuff. If you're a first-time home buyer, you want to list through the whole thing, and everything is going to add value. So I think the first question here for John is talk to us, John, about the government, the federal government programs that is available to someone who happens to be a first-time home buyer.
Sure. So there's some great programs right now from the Canadian government. The first one is the first home savings account, FHSA. Big five banks offer this. You can simply go to them and open one. And it's a Canadian tax advantage savings plan for first-time home buyers. You can have contributions in there and they're tax deductible, kind of like an RRSP. And withdrawals for a home purchase are tax-free, like a TFSA. So lifetime contribution is up to $40,000 and the annual limit is $8,000. So this is a good way to grow your first-time home buying down payment. I can attest the fact that many years ago, my very first home was purchased using my RRSP. And then I took it all out, actually, used it as a down payment to get my first property. And then I paid it back over 15 years. But now they've got this new program together, like the RSP as well. So there you go.
That's good. So there's two investment programs, right, John?
Correct.
The first one, FHSA, and then the RRSP. Great for saving for the down payment and all the things related to buying a home. That's good stuff. So another question, John. People who follow the news a bit or politics, they may have heard that the federal government, they made an announcement, something that's an advantage to the first-time home buyer. Tell us a little bit about that, John.
So are you talking about the recent rules or the stress test?
No, we'll talk about the stress test. Actually, I'm glad you brought that up. We'll talk about that in a few minutes.
Okay.
But the rule that they just announced for the amortization for...
Yeah, so the new mid-December, the new rules are coming into effect for first-time home buyers. So what it is they've taken the insured mortgage limit of $1 million now to $1.5 million.
Okay.
And that means insured mortgages are less than 20% down. Okay?
Yeah.
So now you could put 10% down on, let's say, a $1.2 million property. And then the amortization is stretched from 25 now to 30 years.
Yeah.
So every little bit helps.
Yeah, that's good. So the longer the amortization, the shorter the payments, makes it easier to qualify. Talk about qualifying for the size of the mortgage they need. There's something about the stress test, and I know there's some listeners now, they've heard the term, not sure what exactly what it is. Help us understand a little bit, what is this mortgage stress test that everyone's under?
Sure. So the stress test is really important because it protects borrowers from future rate increases. It prevents over borrowing because buyers might take on a mortgage that they can barely afford. And what happens if the rates go up? They're going to be in trouble. It also maintains the market stability for high levels of mortgage defaults. So they keep them lower this way. And it just kind of answers the higher debt ratios we're seeing today. So the stress test is really 2 points higher than the actual interest rate you're going to pay. So everyone's thinking, great, I got this. Today's best fixed rate is in around 4%, let's say for 5 years. Yeah. You have to qualify at 6%.
Yeah.
And that's just, again, to make sure that they can handle the changes going down the road, just to see what happens. So there you go.
And so obviously, the Bank of Canada, they made 3 rate decreases to the overnight lending rate. People are listening to that. that impacts first-time home buyers, right? Like what are you, no one has a crystal ball, obviously, but no one can know the future. What do you anticipate, or what are you hearing that the Bank of Canada over the next year, what do you think is going to happen? How might that help someone wanting to get in the market?
You know, there's whispers from a couple of people in the financial world that we're going to see a half to three-quarter of a rate cut by the end of this year.
Oh,
I think a half a year for sure.
yeah,
If it's three-quarters, that's even better for everyone.
yeah,
But 2025 is going to be a very interesting and what I call exciting year, because I think interest rates are coming down even further before they bottom out.
yeah.
And there's a lot of mortgages up for renewal next year too. But it's also going to help the first-time home buyer. Right now, people are just barely trying to qualify, but this extra half a point to even a full point by mid next year, we could be a full point lower. That's a big deal when it comes to qualifying.
That's good.
Yeah,
So this is really helpful, John. I appreciate you spending some time with us. Now, what I'm going to do is I'm going to put your contact information in the comments below if people want to reach out to you. But if
sure.
someone who's a first-time home buyer, they don't know how much house they can buy because they haven't thought through their numbers. Is that something you can help them with over the phone, or how does that work?
You know, that's a good question. So first of all, yes, I basically have a phone consultation. We get out some numbers on their side, what they're looking for. And then if they're a first-time home buyer, I ask them if they've got RSPs,
Okay,
because I don't know if it was clear before, but an individual can take up to 60,000 now from their RSP. It used to be
got it.
35,000. So it's gone up to 60 per person.
That's
So if
excellent.
you've got a couple and they both got a nice RSP, there's $120,000 down payment right there on
Yeah.
top of whatever other cash that they have. So that's a big help today when homes around the GTA are approaching $1 million to start. So,
That's great. Yeah, that's excellent. Well, listen, John,
right.
I really appreciate your time. And for those listening, I trust it'll be valuable use of your time. This was. Reach out to John if you have any questions on the mortgage side. And just want to thank everyone for being here. And we'll talk to you later. Bye
All
now.
right. Thanks so much, Mark. Take care, everybody.